Good day, guys. It's your boy Mhlabe the Trader. We are back into my YouTube channel. Um, I just realized that it's been long not uploading any YouTube video. So today I just decided to do one for my channel. So as a Falcon strategy trader, I just realized that Falcon strategy is one of the simplest strategy. You'll get to see it when we are in process. As a trader, you just have to know these two things. So, but then Falcon traders use them the most. So there's what we call impulse and correction. Many people know that. So on the Falcon strategy traders, or we concentrate much on that. So I'll start up with an impulse. An impulse is when the market is going to a buy direction or a sell direction. Like it's when it's going straight to that direction. It's when it's going straight to that direction. And then there's what we call correction. Correction is when the market is going sideways. And then it's when the market is going sideways. So we have to combine these things together so that we can have a strategy. We have to combine them together so that we can be able to have a strategy. So let me remove all these things so that we can be able to combine them. We have to combine them together. Okay, let us start with an impulse. So before we even take a trade, we have to wait for a first impulse after having a reversal pattern. After having a reversal pattern, you'll get to know that. So we have to wait for first impulse, and then the next thing should be a correction. So after this correction, we are expecting the market to give us an impulse to the upside. We are expecting the market to give us an impulse to the upside. And then for us to get other trades or another trade, we have to wait for a correction again. And then we enter our trade. Like there's a way that we enter trades. So then the next thing should be an impulse. So this is a correction. This is a correction. And then this is an impulse. So it means we trade impulse as a Falcon strategy trader. We trade impulse. We don't trade when the market is in correction. Okay, we just enter our trades when the market is in a correction phase, but then we trade impulse. So it is the same thing as when the market is going to the upside, wait for impulse to the downside, and then wait for a correction to be formed, and then that's when we can be able to enter our trade. And then the next thing that we should expect, it's an impulse and then another correction, another correction, and then that's impulse. So this is how the market moves, guys. This is how the market moves every day. This is how the market moves. So you just have to know how you enter your trades. You just have to know that how you enter your trade. So another thing, guys, don't expect it to be straight like this. The correction, don't expect a correction to be straight like this. It's not gonna be, it's not always that it's gonna be picture perfect. No, it's not gonna be that like that. So let's go to our charts. I'll show you there on the charts how that the corrections looks like on the chart. How do I exit this? Oh. Okay, guys. No, like I'm currently in this trade. I'm in this trade now. So I'm currently in this trade, and then I just took a trade after a breakout. But then that's not what I want to show you. That's not what I want to show you. Let's clean up the charts, and then let's clean up the chart, and then let's start from a daily time frame. I just want to show you what I was talking about. Okay, it is simple to trade, guys. It is simple. So let us not concentrate much on, okay, let me show you this. This was an impulse that I was talking about, and then now we had a correction. As I said, that is, it's not gonna be picture perfect as you saw it there, and then this is a correction that I was talking about, and then the next thing, it's an impulse. As you can see, the next thing is an impulse. So we had an impulse, and then we had this small correction, and then we had this small impulse. So it's like this, like we had impulse, and then this was a correction, and then impulse, a small correction. We had this small correction here. Sorry about that. We had this small correction here, sorry, and then impulse, and then we had this. I'll show you these patterns, guys. This is a reversal pattern, and then we had an impulse, and then a correction, then impulse, and so on. So yeah. So let's just start analyzing. Okay. This is where the market reversed, as you can see, after this impulse, and then we have this correction, then impulse to the downside. So this is where also the market reversed after having this impulse, and then it reversed to the upside. So let's go to 4-hour time frame. Let's go to 4-hour time frame, and then I'll show you what I was talking about there. So this is simple, guys. This is simple to trade. This is simple to trade. This is simple. This is simple. Here we just had a small impulse, and then we had um this correction, and then we had an impulse, and then we had let me delete this one. We had an impulse, and then we had something like a head and shoulder, and then that is one of the reversal patterns, and then the market went back. So we also had this impulse, and then this is one of the corrections, and then we had impulse. This is a small correction. This is a small correction. This is a small correction, and then we had the impulse. So we had this double top formation, which is one of the reversal patterns. We had this correction after this impulse to the downside, and then we had this impulse, and then we had this this is a big correction. This is a big correction, guys. And then we had this impulse to the upside. We had this impulse. This is one of the corrections. And then we had impulse. So and so on and so on, guys, and so on and so on. So now we just wanna do it. We just wanna this is where let us just analyze. I just want to show you on how that after getting that you can be able to analyze these things. They are simple. They are simple. So we had this impulse, and then we had this big correction here. We had this big correction, and then the next thing, it was an impulse to the downside. As you can see, we had this small correction here. We had this small correction here, and then we had an impulse, and then we had this. This is one of the corrections. We are in a correction phase, guys, in 4-hour time frame. We are on a correction phase, but then inside this correction phase, we also have impulse and correction, impulse and correction. So let's go to 1-hour time frame. 1-hour time frame. These things are simple, as simple, as simple, as simple. And another thing, you need to know the reversal patterns. You need to know all these reversal patterns. You can see, as I said, that inside this impulse and inside this correction, we had impulse and corrections. As you can see, we have this big correction after this small impulse, and then big correction, then this impulse here, and then this was a retestment, and then it went back, then it gave us this reversal pattern. This is a reversal pattern. You need to know all these things. You need to know all these things, and then where these reversal patterns, and then we had this impulse, and then this is one of the steep correction. This is a steep correction, and then we had this impulse, and then also another impulse to the downside, and then we are having this big correction here. But then when we go down, that's when we can see that we are still having something like so this is where I was looking to take my profits. I think I should close this trade. because I didn't put my stop losses and TP. I think I should. I think I should close now. I think it would be better if I close now than waiting, because now we're on this is more like a reversal pattern. This is more like a reversal pattern. Sorry, this is more like this is a correction, but then the level that is in now, it is the level whereby it is possible that it can go back. So closing my trades, it will be something that it is easier. So yeah, I just closed my trade now. So that like when you are trading, the matter is not to be greedy, guys. You just have to make profits, and then you set your target. You must have a certain target. You must have a certain target, and then yeah. So after this correction, you can see that we had this big impulse to the downside, and then so it means the next thing that we're expecting is an impulse to the downside. It's an impulse to the downside. So it means that after this after this correction, we are expecting impulse to the downside. As you can see, we are expecting impulse to the downside. So this is simple, guys. Even if we can go down to 15 minutes time frame, you can see that the reason I took that trade it was because it broke out of this double top here, and then so okay, and then I took my trade here. So the reason why I closed this trade is because of this level here. We were having something here, so that is why, like, I said to myself, I don't have to be greedy. I don't have to be greedy. And then you see, so I took that trade. It was somewhere here, I think. Yeah, it was here after this shoot to the upside, and then I entered a trade after this breakout of after this spike. This is a spike. This is boom 500, guys. So after this spike, and then I entered, and then it went to the upside. So this is the reason why I closed my trade. It is because, as you can see here, the market did respect this level. So it might happen that also here it respect this level. As you can see that it has started to reject, but not only that, but we are also having 3 touches here. You're also having 3 touches. As you can see, we had the 1 touch, 2 touch. This is our 3rd touch. And then here, down here, we are having something like 2 touches. We are having 2 touches. So this thing is simple, guys. You can see that the market rejected here. So it means we are expecting an impulse to the downside. It means we just have to wait for a certain confirmation. That's when we can enter our trade to the downside, maybe coming here. So you can see this is simple, guys. You know, like when I knew about boom and crash, there were people who were saying that it is impossible to trade boom and crash with when you are trading trend line strategy like Falcon strategy, they said it is impossible, it is hard. So yeah, I'm doing it, guys. I'm doing it. So it is not impossible. It is not impossible. It is possible. I can do it. So people are saying that it is not possible. It is not possible. But then as for me, it's simple, guys. So concerning this pair, boom and crash, my advice to you guys is that don't trade against the spike. Don't trade against the spike. I only trade buys on boom 500. I trade buys. So this is something that I've realized. Like yesterday, I tried to risk and then I entered sells and then a spike took me out. So yeah, guys, you must trade the spike, not against the spike. Must trade the spike. So okay, let me show you another one. Let's go to crash. Let's go to crash. Let's go to crash 500. Crash 500. Just want to show you how that you can trade these things. These things is simple. Trading Falcon strategy is one of the easiest. It's one of the easiest strategies and that I've ever seen. This is the last place whereby the market gave us a retest, or not a retest, sorry. Okay, let's mark this one and then also this one. Okay, this is kind of a correction, guys. This is a correction. This is a correction. And then this is a correction. So as you can see that we are coming from an impulse and then now we are in a correction phase. So yeah, let's just go to let's just go to, okay, let's also mark this level as the highest level of this. This is the highest level. And then let's go to 4-hour time frame. This is simple, guys. Like trading Falcon strategy is easy. It's easy and simple. You can see that this is a confirmed correction. We are having 1 touch, 2 touch, 3 touches. So for those who trade support and resistance, yeah, they might have caught this one. What's going on here? And then you can see this is a reversal pattern, but then this is how you are going to get this trade as a Falcon trader, not like this. But this is how you are going to get this trade. After this is a rejection, and then after the breakout of this level, then you can see that we had this as a retestment. We had this as a retestment. Now it is pushing to the downside. So now we can say that we are on an impulse, though this seemed to be a correction, one of the reversal correction, but it will depend on how it forms. It will depend on how it forms. If ever it comes back here and then we are taking a sell to the downside, this will be simple. It depends on whether, okay, let me check on 1 minute. Okay, yeah, it means we when the market gets there, we are going to take sells, because as I said that I don't trade against the spike, but I trade the spike. So yeah, this is simple. This is simple to trade. Let's go back to for time frame, and then so if the market comes back here, if the market comes back here, it means we'll be having one touch, two touch, and then we'll be looking to capitalize to the downside. This thing is simple. Let's see. And this thing is simple, 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 simple. You just have to be consistent with it. You can see that I'm going to the downside. This is simple. And then oops, I'm sorry about that, guys. I'm sorry about that. So yeah, this is simple. Let's go to 1 hour time frame and let us see what it has for us. As you can see, so like you have to fix your trend lines. You have to fix your trend lines. So you can see that the market seem to be getting a reversal pattern here, but we'll just have to wait for the market, because we don't control the market. That's one thing that we have to know. That's one thing that we have to know. So you just have to fix your trend lines and so on. So let's go to 15 minutes time frame, and then look at this, guys. Look at this. So you see, and this is one of the reversals. And there's this level. It means this is a support level. So the market is supporting here, and then it gave us a W formation. This is one of the reversal pattern. This is one of the reversal patterns. So if it was to trade this one, since I don't trade against the spike, guys, but then if I were to trade this, I should this is the same trade that I took on Boom 500. This is, it was after the breakout, and then stop loss being there, and then coming to this point. You see, the reason why I don't want to trade these guys is because I mean, the reason I don't want to trade against the spike is because when the spike come, it doesn't matter if you have placed your stop loss. It moves your stop loss until the place where the candlestick will stop. So this is the reason why I don't want to trade against the spike. So this was a correction. It means like I was going to get this one. I was going to get this one. You see, I was going to get this one going down. You see, like, if I was to trade with a normal lot size, like 20 lot 0.20, it means here we're going to get something like maybe 4 USD and so on. So yeah, that is better than nothing. See, 4 USD, that's a lot, guys. That's a lot. That's a lot. It's not like 4 rand. So you see, just imagine taking this trade. It's just that I didn't see it, but yeah, it is what it is. And then our stop loss being there, and then so on. So yeah. Thank you guys for watching. Thank you guys for watching. So please just like this video, and then if you haven't subscribed, please subscribe, and then share the video as well. Thank you. Thank you for watching, guys. I thank you for your support. Yeah, it's your boy Mhlabed the Trader signing out.